I hope you've gotten some coffee and snack and, have some break as we're going to have a more serious conversation about China. So, welcome to the session. What to expect in a post-pandemic China? Opportunities in a global downturn. Most countries have opened up their borders to the world to do business and to welcome tourism back to their country. And China, hopefully, will open up soon. It's one of the last countries now, but it is expected to ease its COVID restrictions very soon. A lot has changed since China shut down to the world in early 2020. Now, due to limited physical access and coverage of China, it's hard to really know what's happening and what happened on the ground in China. So, most of us know here that you can't really know what's going on by just reading news headlines. And that's why today we have a panel of seasoned investors who have lived, worked, and invested in China most of their life. And we hope to hear from them what's really going on the ground and really what we should be expecting moving forward. So let's welcome the panelists. So what was the COVID years like in China, the last 2.5 and plus years? Please share with the audience one of the most important observations you've had. And that's not something anyone can read from news headline. Charles?
Oh my God. Well, this room in some ways speaks a volume about our perception of China. Because if we had this conference like this 3 years ago, this room would be packed, and this panel would be one of the most popular panels. Today, a lot of people don't seem to care, at least temporarily. This last 2 years for me is, I retired from actively running the market, so I'm no longer on the front line. And
so Charles, tell people who you were before and what you're doing.
Oh, okay, I'm sorry.
It's such a big deal.
I used to run the Hong Kong Stock Exchange, and I did that for about 11 years. I retired, and then I started something else. So I think this last 2 years, I actually stayed off the front line, and spared myself, and a lot of the anxieties and heartbrokenness and many other things a lot of the investors have gone through. And I actually traveled on a new journey that actually gave me tremendous hope that we're going to see China differently. We're going to see a new China, a new way of trading, a new way of investing. I'm very hopeful for that, and at some point, I hope to be able to talk to you guys about it.
And what about Harry? You actually lived in Shanghai.
Yeah.
The city that went through the most restrictive lockdown for a couple months. Can you share with everyone?
Sure. Thank you, Wenchi, and thank you for the invitation from Milken. And actually, it's my first trip outside China in the past 3 years. So, yeah, my name is Harry, and I co-founded Lightspeed China in the past 14 years. So, Soul Capital is my newly built firm, a more China brand. And we're focusing on early stage investment. And luckily, we have invested several top innovations in China in the past 14 years, including the top EV company, Xiaopen, and the biggest fleet management platform in China called Future Alliance. We were all their Series A investor and one of the biggest institutional investors. So with Soul Capital, we're still looking good on the early stage opportunity in China. So as Wenchi mentioned, I was raised, studied, and lived in China in the past 40 years. And more importantly, in the past 3 years, I was with Shanghai, the city, during the COVID period. So actually back to 2020 and 2021, everything is pretty good in China. And for myself, I'm back to work since February the 19th, to be precise, in 2020. So you can imagine, in the past 2 years, all the Chinese are proud of the COVID measurements in China, and we can travel freely in China for most of the time. But things have changed, especially in the Q2 this year. I think the reason for that is the newly released virus has more contagious. So we have to change in policy as well. So there's several aspects I want to share with you. That's I think it's the people on the ground like me feel about the pandemic. Firstly, is the elder group in China and in Shanghai. I think the elder group in China are not acceptable to the virus. They are afraid of the side effect. So the consequences is the vaccination ratio for the elder group in China, which means they are more than 80 years old, is only half. Comparing to the number in US is around 85 or 90. So that's a big reason that the group in China and the government in China want to take more measurements towards the pandemic control. And secondly, I want to share with you is that with the 1/5 of the population in China, it's in the world, it's never an easy job to manage the pandemic in China. But the real situation is that the policy is we need to have a COVID test every 3 days. Once you have it negative for 3 days, you're free to go anywhere. In Shanghai, we have more than 1,000 of these spots, COVID test spots. There are about 5 or 6 around my neighbor in the downtown Shanghai, and it's free of charge. So it's not easy for everyone to adapt to this mechanism, but I have to say the people on the ground, because they want to work, they want to work harder, they need to travel to other cities of Shanghai, people do the best to get accustomed to this mechanism, and the government is doing good because it's free and they provide sufficient spots for people to take the measurements.
But we did see a lot of complaints about sort of those restrictions online, right? So I am curious, now I'm turning to Nisa, who is an expert in healthcare, especially investment. Do you think sort of China post-pandemic offers a new opportunity for the healthcare or some of the investment that you're doing?
Well, it's interesting. I was just in Shanghai last week going through the test that Harry was talking about. But I've been traveling in the last in the U.S. and China and last year, and I'm based in Hong Kong. But what's really interesting is, I always compare how China faced COVID versus how they faced SARS. Within the last 20 years, that's a huge difference because back then we didn't really have the ability to develop our own diagnostic, our own drugs, our own vaccine. Now we're able to do it very quickly. In fact, I was talking to somebody in New England Journal. Back in 2020, in February, we were able to publish a paper sequencing the COVID so that immediately every drug company and vaccine company in the world are able to develop drugs and vaccines, mRNA, and so forth. So it's great to see that within the 20 years we're able to develop that. And in fact, one of the companies that received a WHO approval from China is one of our companies, CanSino. In fact, we've just got approved the inhaled version bivalent vaccine that is 90% efficacy against Omicron. So I just took that three weeks ago. And I believe that one of the conditions for China to consider opening up is really to let its citizens take a new version of vaccine. So that's probably one. And then another one of our company is one of the largest PCR testing site in Shanghai. So, but they were also the original key diagnostic lab in Wuhan. So in the last 2 and some years, they've been working very, very hard. And I do believe that even companies like those would really like to, forget about PCR, really focus on developing new diagnostic and so forth. But at some point, I do believe that there's a lot of progress in healthcare and drugs development and so forth. So it's very, very exciting to see what China was able to step up on in developing.
So it sounds like COVID as a pandemic, obviously it is tragic for a lot of people, but it has also accelerated in many fronts. And so I know Cynthia, you in particular, have been investing in certain sort of hard tech as well. Can you share with everyone what China has been doing over the 2.5 years?
Yeah, definitely. By the way, I just want to ask everyone a question. So how many of you have been quarantined for over 5 times this year, in past 2.5 years? Raise your hand. Okay, 2.
Wow.
Okay, I have been
The
quarantined.
rest are 10.
Yes. Last month I finished my quarantine for 10 times. So basically I spent
And that was in China.
Yeah.
So how many days in total?
5 months. So for the 5 months freedom, I think, of course, the purpose is to really go to China to see what's happening in my investment area, deep tech area. So what I have observed, beginning of COVID, I think Wuhan has been locked down. And one of my portfolio company, he is CEO of Yangtze memory chip. So he didn't go back with his wife in Shanghai, and he stayed in factory during Wuhan lockdown. So the chip production company never stopped for even 1 single hour until today. So lately, last few weeks, we saw all the news because Apple was using its chip. That's one example. Another example, I think, is the Shanghai situation. Another portfolio company of mine is supplying the equipment to IC. So in order to secure their supply, basically all their employees stay in the factory for how many months? Until Shanghai was released. So that means 3 months they didn't go home in Shanghai. So I think another example is NIU. Yesterday we saw NIU is opening a charging station in Germany. So NIU has shut down the factory for 2 days, but only 2 days. Then, you know, one EV requires 20K components, and only shut down for 2 days. Then he start to produce again. So right now we see EVs as China's EV. Today, BRD is selling EV probably end of this year of 0.5 million maybe, I guess. But we see chips are also supplied to the world. And we see another portfolio company of mine is TikTok. So TikTok now is software, of course, it's much easier to use. So it's used everywhere. So I think in past 2.5 years, although China has been facing so many difficulties, but I really see my portfolio founders, the tech founders, they really show great will to overcome all these difficulties, and also to supply the globe maybe cheaper and better service, tech service. So I would say probably before 30 years ago, we see the product was made in China. Now I think it's a era of new made in China, but it's no longer the low-end chips, low-end stuff, but more in the high-end manufacturing and software made in China, or maybe researched in China to be more precise.
So it sounds like, while most of the world shut down over the last 2+ years, China in some areas actually, supported by the government, was catching up and perhaps, is leading now in some areas. We don't really know until really, when China reopens. The question I have is really, so many people have gone through the difficulties. You spent 5 months doing quarantine. Is all this because, and will this change for the 20th Party Congress in 3 weeks? A lot of people feel like, okay, we're still holding a lot of hope in China in the future because this is just because Xi Jinping has to get to his 3rd term. What is your view? Ning Guo.
Yeah. Now I feel guilty if I told you I have I have had a quasi-normal life my last 3 years because I navigate with the COVID, and the COVID never successfully shut me down because I live at the same time in France, in China, and in the US. I was born in Fujian, so I went to France when I was 20, 3 years ago, and then I founded a cafe, Capital, in Paris, 15 years ago. I grew from 0 to 5 billion euro. Now we have 9 offices. So everywhere we are local. I think the topic, actually why I can navigate through these 3 continents, because I have still keep my Chinese passport. I'm Chinese. So I can back and forth. I never stop to go back to China. I can go back to France, to Europe, and I get the national interest exemption from US very early. I don't know why I did.
But not
So
everyone.
the question is, we
Yeah.
talk about a lot of consequences, with the negative kind of things. Let me just maybe put attention to what the impact for the coming years. Because we have the time zone difference with COVID, so actually I told the Chinese entrepreneurs about what we have seen in Europe, tell European entrepreneurs what is going on when COVID started. For me, I think we have to look at forward what is changing. First of all, data. The 3 years, the world, the level of data is huge. You cannot imagine. The growth is exponential.
You mean data collected?
Yes.
Okay.
Yes.
Because of
In China, in particular,
Okay.
it's already very
Because of the
accelerated.
health, because of the way they sort of the government manages the healthcare system.
Whatever the government does or don't does, anyway, the data is there and abundant and cheap. This is going to change, and the change, the speed is going to be exponential. First. Second observation about Chinese situation, it is entrepreneur quality. Whatever happens, shutdown, no shutdown, COVID, PCR, texting, whatever, they always find a way. Always find a way to overcome difficulties. Even I was shut down in Shanghai. I can tell you, one of my entrepreneurs sent me a truck. We buy a pass. We don't buy, we didn't buy a pass. They say pass, and then I provide to all my team members. We have 15 families in Shanghai for food, for vegetable. Even I call a French general consulate. Any French family needs food. My truck arrived. You can find. You see the entrepreneur. They are really. You just give them a little sunshine. They are going to rent you a big oak. This is Chinese entrepreneurs' facility.
Right. I think nobody disputes that, Chinese entrepreneurship is incredible. I've personally witnessed that.
So my conclusion is the best is yet to come.
So I do think, right, the last 2+ years, in some ways is frustrating to a lot of this incredibly ambitious entrepreneurs because of the COVID policy, also because of some of the sort of people would call it from the West, is the crackdown on the tech sector. Now, after the 20th Party Congress, do people think things will bounce back on the panel? There's certain expectation that things will change. The question is how soon and how fast.
Maybe I can start off.
Yeah.
I was in Boston and New York in November. So when I had meetings with folks, they all said this is the first face-to-face meeting they've had since COVID. So I think, the West started really opening up beginning of this year. And so for the last 2 years, folks have been staying at home. So then we're talking about the difference for China to delay the opening. We're really talking about a little bit more than half a year right now compared to the West. So, I mean, I do believe that, just looking at our portfolio companies, how, I also reflect on the same. We have quite a few companies who had 30, 50, 70 people who were, in the office, during 2 months. And the man got 5 minutes and the woman got 7 minutes to clean up every day. But, by some of the startups. But I do think that quite a few of them are working really hard, and there's good progress. The key thing is when we talk to the investors, they are not able, outside investors, they're not able to come into China to do due diligence. So therefore, they really don't know what's going on, especially the public investors. So when the border opens up and when they start meeting companies face to face, I think that would really make a difference. Yeah.
Maybe I can add something. I came here last week and to give a speech about the investment environment in China, and a lot of people ask me whether you still believe in the China, given such a lot of things happening in China, still have super returns. And my answer is yes. And I told them you should look back into the past 50 years in China. And there are two unrivaled strengths of Chinese people and China government. One is figuring out the problem quickly and heal and bounce back quickly. And the second one is turn disadvantage or zero to advantage. To give you an example about that, you still remember China opening the door in the early 80s, right? And it changed the policies so dramatically, starting from the early 80s, and in the past 40 years, China has such a big development, and took a lot of industry, like digital industry, payment industry, logistics, and etc. All these industry are zero. Even 20 years ago, even 10 years ago, you cannot say we have these. But now, for all these industry I mentioned, China not only figuring out the problem, but still they successfully managed to make something in this industry and become the world top. So in terms of the COVID, I think it might happen similarly, is that it definitely needs a lot of efforts, additional efforts, a lot of lessons took throughout the process. And during that process, I think the government and the population, the entrepreneur are all learning through that process and get learned and quickly bounce back and recover from that.
Well, one of the things that Charles is doing, and maybe you can share with the audience, is very helpful to me, because you actually focus on the very small entrepreneurs and enterprises. I think pre-COVID, as the world was still primarily focused on really, Wall Street-led financial system, and very much tilted towards sort of the bigger companies, right? But it sounds like, the last few years, especially the Chinese government, has been very wary of that kind of financial model, which is too centralized, too much tilted towards big corporations. And so tell us what your innovation is.
Yeah, I think we think after the 20th Congress, trying to answer the question, we're going to see a very different China. And this panel is not going to be overly critical of China for obvious reasons. But I'm sure we all fully understand. I don't think anybody has underestimated the current negative feelings in that investment. So the key question is what's going to happen after October. And I think China is going to be very different. It's going to be different in two major areas. One, I think the investment, the development is probably no longer going to be about additional incremental growth anymore. It's still important, but it's no longer the obsessive KPI of China over the last 30 years. The reason being, I think the focus is going to be back on redistribution rather than continued growth. But the problem is the people getting very, very nervous when they hear redistribution, because it's very important to understand in the context of China, redistribution here is different from what people think it is. People are scared of a redistribution because they think we are redistributing what is already in private hands. When China is talking about redistribution in the next 30 years, it's about how to make sure, because China's value was here 30, 40 years ago, it's here today. The key question is who has that wealth right now? And because that is an indication whether China has hope or not. And I think, there are all sorts of statistics you can look at it, but I reckon that 50% of that value now today is still in somewhat state hands. whether that's in the tax system, that's in the bank system, that's in the SOEs, or anything the government controls. So that essentially is all about the priority of the next decade. It's not about getting another 6% growth every day and redistribute better and more equitably in that incremental growth. The priority is to make sure that we do not redistribute this 50% with corruption anymore. So corruption has to be completely, I don't think it will ever eradicate it, but at least the goal is that this redistribution, if still with corruption, we have no future. But if this 50% is going to be redistributed to compensate the losses that generations of migrants have suffered, or our environment has suffered, or our cap depositors have suffered, or our land rural population has suffered, in order to support the industrialization and urbanization of China. So that completely newly created wealth that is currently still very much in states' hands, it is that redistribution. It's not about actually redistribution, it's about how to run the business and the society and the economy in a way that ultimately is going to allow the lower end, the lower half of the population to get the more disproportional compensation for the sacrifices they have given for the for the industrialization success of China. So what we are doing today is to say, is the old traditional model going to work for China anymore? China pretty much adopted the Wall Street model into the Chinese financial system. But that financial system is not working for the little guys. It's not working for the real economy. We started this MicroConnect not because we want to do charity and we want to really help the little guy. We actually think China is going to create a completely new blue ocean of new investment opportunity. This opportunity is premised on China's massive, deep and broad digitalization that allow revenues to be so transparently registered in all the digital system in China, number one. Number two, not only those revenues are digitally transparent, they are digitally interceptable, meaning you are able to distribute the revenue before the revenue hit the account of the little guy. And if you are able to do that in the veins, why do we want to lend and worry about whether you're ever going to get paid? And if you get paid, you get paid a fixed rate on the debt. And if they go good, you have nothing to do with it. If it go bad, become your NPL, the traditional debt. Or equity. Who cares about equity of a little guy because he just lived for 5-6 years? We are used to investing in trees that never die. So we have to invest in trees that either are the big trees or trees that eventually can grow into big trees. China today, because of this digital interceptability of cash flow and revenue, we are able to invest in flowers and plants that actually comes in spring and die in winter and come back again. And we do that again and again. So this is what we call a new asset class called the daily revenue contract, DRC. We're talking about investing a small amount to the company, to the little shop, whether that's a restaurant, a convenience store, a mechanic shop, a barber shop, whatever it is, the daily services of Chinese people. And then from day one, you give the money, you start to collect a little bit every day directly. So that's how it is done. We have a white paper, you can check on it, and otherwise I'm monopolizing this forum as a self-promotion.
So I'm letting Charles speak so much about that because I think that embodies Xi Jinping's common prosperity.
I didn't do it because of that.
I think that pretty much is the philosophy of Xi Jinping's common prosperity, which is a different kind of capitalism, however you want to label it, in China today. However, what does that mean for investors? I'm curious how people think about this because the last 10-15 years, China's technology sector is driving much of the growth, real estate, healthcare, and all that, and sort of had those big tech companies that has been frustrated and cracked down, however you want to call it, because the government doesn't think it's fair for the society, for the people, etc. Does that mean you're no longer going to see those big techs in China.
If I can just make a quick comment on that,
Okay,
then I will.
and then I want to turn to others. Yeah.
Why don't you turn to others first?
Cynthia.
Oh, before giving the answer, maybe I just have a quick introduction about FutureX. I'm the founder of FutureX Capital, and the FutureX we focus on early to growth stage in deep tech and focusing on China tech supply chain. And in past 5 years, we have made over 40 investment, totally about 1 billion. We're focusing in area of EV, semi, cloud services, AI data. And what makes FutureX different from others is we focus very much on the industry, and we build our roots very deep into China tech supply chain. And we had interact with all these tech giants in various ways. Some examples are our portfolio company, New, Xiaomi, and ByteDance. So for myself, because I have been accumulated 3 billion investment into China tech for past 15 years, so I have gone through 3 tech bubble or tech cycles. So every time when she asks these questions, I think 5 years ago, people ask, okay, who is going to be next? Meituan, Didi, Xiaomi. Then we see ByteDance, we see New, we see chip company, we see some software companies. So my answer to that is China, whenever there is a crisis, there is always opportunities. I think the biggest achievement of China having all these Tencent, Alibaba, and all these tech giants, they have built up I see 8 million group of software engineers, and also Huawei built up hardware engineers, and all these engineers are becoming a huge asset right now. Last week I met with one lady. She's American Chinese born in China and ex-Googler. She founded his own company 5 years ago, and now she's making $15 million per year profit, and his net margin is like close to 30%. I was wondering what kind of business you are doing. So basically, she told me she only have 2% in US doing sales, but all his apps are used in US, so he's 100% business in US. But all his engineers are in Chengdu, and she shared with me Chengdu 1 month is. Can everyone guess how much is their wages? 1 month is 1,000 Sing dollar. Okay, being a computer science graduate, I graduated from National University of Singapore here. Right now, the graduates is 1 month average salary is 10K here in Singapore. So Chengdu is 1/10 of the money. So what I mean is, I think China, the economy for this year have been quite bad. So right now we see a lot of Tencent, Alibaba, they are all optimizing the people talent pool. So, and every year China have 10 million new fresh graduates. Lots of them are computer science graduates. So we see a very clear trend that if the talent pool can really help us a lot in terms of supplying. And given we can imagine when China has been closed for past 3 years, and we can still see so much happening in hard tech space, right? So if we see slightly ease as we are expecting, the market is expecting, I think there is going to be more and more areas can see more and more, life and the development will be coming back, given supported by this close to a million, over close to 20 million software engineers and skilled high-end manufacturers.
Well, I think the Western media has been reporting a lot on China, right? So a lot of it is pretty negative. The narrative is pretty much commonly shared, whether it's politically or economically. And so, but our panelists have been more positive about China's future. Are there things that worry you about China? Some of the risks, whether it's geopolitical or just economic, the fundamentals. What are some of the things that worry you the most as an investor?
Yeah, it's not, China is not a question of COVID or just it's much more deeper, you know. Let's do a bit of philosophy. It's a question about which kind of society we want. How to deal with climate change. How to deal with the inequality of wealth. How to deal with the education. So, before, when just assimilate a country as a company, when you get the data, what do you think? You can allow a country or party maybe do some business model innovation, to think how to use the data to do their job. For me, I think the perception is not reality. I have been living 33 years in France, last 10 years in New York. You know, it's impossible to understand each other, the different culture. China never changed their ideas. They never had their objective. Never. They always say what they want to do. And when they try to come to do in their way, and then people are surprised. So, you go to China a couple of years ago, even you close eyes, catch a meat, because the buffalo is so big. You believe you are intelligent. Today it's a skinny, say, buffalo. But even a skinny buffalo, I come from Fujian dialect, we say, even a skinny buffalo has 300 kilo of bone. Now you need to know how to cook a good soup with the bone. You know, with the bone, 300 kilos of bone, you can cook still a very good soup. So for me, the fundamental thing is not what you want. People intelligent, always I want to catch all opportunity. You catch one opportunity is already huge. Why you want to catch all opportunity? Leave some opportunity for young generation. You have a big tech for. I can tell you in China, there are thousands young generation, they are ready to rise and to catch. We continue to invest massively in China. I never stopped investing in China, never stopped investing in France, never stopped investing in the US. While I'm a Chinese. Okay? So the question for me, I think that the best use of this time is that let's go back to ask you what China wants and what you can do. And then in this regard, maybe it were much more relative to say, okay, opportunity is still there, population, scale, entrepreneur quality, digitalization of economy, and even a skinny buffalo has 300 kilo of bone.
I think that's a good point, but you know,
I'm very clear on my position.
but China is so connected to the rest of the world economically, and it's very hard not to discuss the topic of what could happen if there's any major conflict. And I'm not talking about, because we saw what's happening in Russia and Ukraine. This is not unimaginable right now.
I have 20 Fortune 500 companies global as my LPs, and we have a very, very deep connection together. Not only China, because 15 years ago I said China is important, but not only China. Today, who want to say replace China for supply chain? We debate in France. You know, since 15 years, people keeping asking same question we are discussing here. It is not just a game. You say, oh, I change the supply chain tomorrow. You can change it. Impossible. Take an example of battery. You build a factory in France. I can build a factory in France for battery. But who is going to produce the equipment? The true industrial know-how is not the manufacturer, it's in the equipment suppliers. So the true industrial guys, they are not just say, okay, I change the supply chain. No, impossible. No one, whatever happens, no one can escape about the importance of China. Okay, so this is a fundamental starting point.
Harry.
Yeah, I pretty agree with Ms. Tai. But my biggest fear is already in the name of my company. I name it Soul Capital because Tai pointed out, all of us are only focusing on our brain.
You can agree with me for free.
Most of the people on the world are focusing too much on the brain, about how we can win, how we can have big returns, but we forgot one common ground for all the human beings, which is the humanity. So the reason we call it soul capital is, I've been a venture capitalist in the past 14 years, but I ask myself whether I have a soul. I see four big boys. One is China, one is US, one is Europe, one is Russia fighting each other on small tiny things. And it's the key lesson we should take for all the human beings in the coming 100 years. It's about the cultural conflicts. And maybe there's only one solution, is there's an alien on the sky. Then everybody focusing on to find out the common ground of each party of these four big boys. Otherwise, we are fighting each other on nonsense, right? That's my interpretation. And the second point is, we are entering into a period that everything has been digitalized, and everything has been too fast. So the misunderstanding for both parties, for each party, are so strong. Even for us, when people look at the measurements on China education sector, on DD issues, we don't put ourselves on the context of the other culture. We put it on the culture of ourselves. Take the education and DD sector as an example. In China, in the past 30 years, everything is in a barbaric growth, no non-monopoly law at all. So it's the first time for China government to pause a little bit, to ask ourselves whether we should let Tencent and Alibaba control the market. As an investor, myself need to ask whether I should let my portfolio to sit aside by Tencent or sit aside by Alibaba, which is not healthy, right? So in my point of view, we should really listen to each other in a more peaceful, calm way and put ourselves on the context of the other culture or party. And that's the two things and the most crucial things for our future years.
We have very little time left for this panel, and I would just like each panelist to actually share your sort of final message you want to share with the audience and beyond. Maybe Nisa first.
Well, I think, responding your previous question, I think, for us, when we invest in healthcare, we don't pause and not continue to pursue unmet needs just because all these, rhetoric going on between different countries. We still want to achieve, we still want to get to rare disease, cure, we still want to try to cure, Alzheimer's and a lot of other things. So we may think about how expensive the money will become with inflation, but, the bar will just keep charging ahead.
So there's demand, there's investment.
Yep, and I do believe that with this, we're going to be continuing doing a lot of global collaboration with Europe, with US and China. And so individually, companies are really continuing working very closely together.
Despite the politics. Charles?
You have 27 seconds. I don't know. Unless I can have a minute, I'd rather just give it to Cynthia.
I hope everyone can join me to help to promote China's highly efficient tax product and services to the whole world. I think that's a tax solution to solve the problem Henry mentioned.
But I do feel a little bit unease that this panel, I have to say, is overly optimistic.
I was trying to ask more questions about this optimism.
We all need to be honest with ourselves. If I can make a final point, is that okay?
Yes, of course.
Just very quickly. I mean, one big issue that investors, is wrestling with is why China is doing what it is doing with the big tech, with this and this education. But big tech is the big part, and particularly when big tech is becoming fintech, that's supposed to be great and wonderful for everybody. And why is that not being welcomed? And how in the future investors should be looking at future, prospect and on that. That, I just want to have a simple test for everybody that works for me. Think of China's financial resources. Chinese people's financial resources are not completely free because it's in the capital market. It's a capital control. So think about that. Is essentially all the money resources are like water pushed up to the Himalaya altitude and blocked in a big dam. So that means that that water has huge pressure, which means that that water, if you're able to get water from that altitude and be able to distribute that on sea level, imagine the interest spread you're able to make on that. But the reason that money, that water is with that gravity up there is because it's protected by the sovereign facing credit of China or the government. So therefore, the government think of that China differently from US government thinking about Wall Street. For the US government, you collect taxes and that's all you care. And the rest of the market, if people make money left and right, you don't really care. It's a zero-sum game from the government. For the US government or Western government. In China, that money is not free. That money is not free from a freedom perspective. That money is not free from a financial freeness perspective. So therefore, you know, China is the only market where you can have interest spread at that level. So whoever is trying, you know, you see consecutive years of people going up there corrupting officials who control the dam and be able to give you some water on that tube. I think if you have a small tube, probably going to be okay, and people will leave you alone. But if you have industrial-sized pipes, like some of the big tech pipes, and that water comes down to the ocean, you know what will happen. So that any time in the future, if you see a business, whether or not you think that fintech is going to work, is that the question you ask is, are you using public money? Are you using that money? If you're using that money, you better really be regulated like hell. Otherwise, please, that's not your business. That's the government's business, and that applies to the same to the Asian market. It's because of the Chinese balance sheet. If you think China as a bank, the liability side of China's banking balance sheet is solid as a rocket. That's because of the protection of the sovereign facing credit, and there's never going to be a run on the bank. You can screw it up on the asset side with 20% NPL, everything is going to be hunky-dory. Therefore, it is very important for people to really make sure that your distribution site, you can build a great distribution site like the big tech has, and you can charge a toll. You can charge a toll by vehicle, but don't ever have ideas charging a toll by looking at the content of the vehicle and see gold, and you think you can charge a percentage of that gold. That has nothing to do with you. So that's the litmus test of investing in big tech with finance.
Well, we're way over time, but I want to thank the panelists. Again, I want to thank Milken for actually convening this panel, which actually has a very positive outlook of China. Whether you agree or not, I think that's a very important perspective, because that's not something we read in English media, basically. So we appreciate everyone's perspective here. So thank you again.
Thank you for joining us. We hope you enjoyed the discussion. Please make your way to your next session. We gratefully acknowledge the participation of the following organizations whose generous support makes the conference possible.
There's nothing here. The next two sessions.
홍보 안 했어요.